Moving on to the benefits of divesting. A decision to divest a business unit can arise from its underperformance in terms of meeting its required rate of return as shown by its capital asset pricing model. This means that holding on to the business unit will be detrimental to shareholders as this is essentially holding on to a negative NPV project. So what does the capital asset pricing model means? So the CAPM is a model that describes the relationship between expected return and risk of a security. It shows the return of security is equal to the risk-free return plus a risk premium based on the beta of that security. So a point to consider is that different business units within a company may report a required rate of return that is higher or lower than the rate of return of the firm as a whole. This is because of the fact that different lines of business experience different levels of systemic risk or beta. So what does the systemic risk and beta means? So the systemic risk can be defined as the risk associated with the collapse or failure of a company, industry, financial institution, or an entire economy. So it is the risk of a major failure of financial system, whereby a crisis occurs when providers of capital lose trust in the users of capital. While the beta or the beta coefficient is a measure of sensitivity or correlation of a security or an investment portfolio to movements in the overall market. So we can derive a statistical measure of risk by comparing the returns of an individual security or portfolio to the returns of the overall market.